Hello and good morning, everybody. My name is Nan Madden, and I am the Executive Director of the Minnesota Housing Partnership. And I'd like to welcome you to MHP's call on federal and state legislative updates. As you know, Minnesota Housing Partnership has been hosting these Friday calls during the legislative session, which last year never seemed to end, so we did quite a few of them, to share timely and critical information for all of us housing stakeholders on policy and legislative proposals. I know we have about 100 people registered. I think that folks are still coming on. I just want to remind you some of our basics, which is, of course, keep yourself muted, but do please use the chat function during our program today, and we'll do our best to monitor the questions and certainly see if we can cover some of your questions with our guest today. So there is so much to discuss today. This week, the state legislature came back from spring recess and they released their respective omnibus bills in the House and Senate, and we are quickly moving to just a month or so left in the session to work out these details. And we're going to hear about that in a minute. Today, we're excited to take an opportunity to take a deeper dive on affordable housing and how our policy decisions on taxes impacts housing affordability, production, racially equitable housing outcomes, access to housing, and so much more. So our guests today include Commissioner Robert Doty, who is the Commissioner of the Minnesota Department of Revenue. We also have a panel with Nan Madden, who is Director of the Minnesota Budget Project, and Brett Grant, who is the Director of Research and Policy for Voices for Racial Justice. And they'll be talking a little bit about the campaign called Together We Rise to expand our tax revenues. And then we also have Representative Esther Agbaje, who represents Minneapolis as a DFL freshman legislator. So we'll get started here. Good morning, Commissioner Doty. I can see that you're on. Thank you so much for joining us this morning. Are you with us? Yeah.
I am. Thank you.
Great.
Good morning. I had to get myself unmuted here.
No worries. Well, listen, talking about taxes can sometimes seem to be only about complex formulas and complex math, but we know, of course, that our budgets, our policy choices are really just a reflection of our collective values and our priorities. And we understand that, our tax system, if we think about our tax system through that lens, it sort of puts a different understanding on what's at issue in these discussions.
Absolutely.
So for our housing stakeholders that are on the call today, I wanted to start off by just giving you a chance to tell us about your vision, your goals as Commissioner of Revenue, and what you're hoping to see. Welcome.
Well, thank you very much. I've got a little prepared presentation that I'm going to walk through, if that's okay, to start with.
We have about 15, 20 minutes. That's great.
Yep. No, I got you on that for sure. But before I really get started, and I want to introduce myself, again, my name is Robert Doty, and I'm the Commissioner for the Minnesota Department of Revenue. And also one of my colleagues is on the call with us today as well, Tracy Fishman. She's our Assistant Commissioner over Tax Policy and Public Engagement. So she'll be my backup here. So I appreciate this opportunity to speak with you this morning. So I'm going to walk through kind of my prepared presentation, and I'll answer whatever kind of questions that you have. So first of all, I think it's important to start with a little bit of background about the department. Our job is to help customers understand and meet their tax obligations under Minnesota Tax Code through efficient and effective tax administration. We serve customers with 1,400 employees across 19 unique divisions. Our employees work remotely and in offices located in St. Paul and Greater Minnesota and key locations throughout the country. Each year, we issue over 2.1 million income tax refunds and collect nearly $27 billion in tax revenue for the state. We process tax returns for nearly 3 million individual income tax filers and 850,000 property tax refund filers. We also serve more than 430,000 business income tax filers and over 345,000 businesses that collect, file, and pay sales tax each month. So now what I want to do is to give you a little bit of sense of of the governor's tax bill, because that's kind of where we're going here. So the governor proposed investments in his COVID-19 recovery budget. The budget prioritizes those who have been hit hardest by the COVID-19 pandemic, and that includes working families, small businesses, and students. The first area that I'd like to discuss is the investments the revised budget makes for working families and individuals. These investments include the additional expansion of the working family credit, the expansion of the homeowner and renter's property tax refund, and a subtraction for unemployment insurance benefits. In the revised budget, the governor proposes to significantly build on the known successes of the working family credit while addressing gaps in its current structure. The governor recommends investing more than $300 million over the next biennium to support working families. The Minnesota Working Family Credit is a tax credit for low and moderate income working households that currently boosts the incomes and alleviates poverty for more than 300,000 Minnesotans. The changes include, number one, allowing taxpayers with I-10 numbers to claim the credit. Number two, expanding the eligibility for the working family credit for 19 and 20-year-olds. Number three, expanding the tax credit for low-wage working adults who do not claim dependents. And four, extending the phase-out for each of the brackets. And finally, allowing taxpayers to use either their 2019 or their 2020 earned income to claim the credit. The pandemic and recession have especially hit low-wage sectors such as restaurant, warehouse, grocery store workers, health aides, and more. Expanding the working family credit to these taxpayers for those ages 19 and 20, as well as to single adults of those who don't claim dependents, would help boost the income of many more Minnesotans, including those in low-wage jobs who are doing essential work during the pandemic. These Minnesotans now and in the future deserve the modest boost that an expanded working family credit would provide. The governor is also proposing expanding the homestead property tax refund and the renter's credit. We know that this year has been difficult for many people with low incomes as well as those on fixed incomes. And these refunds provide effective and targeted support for those households. This is an important program for helping reduce the cost of housing and shore up taxpayers' ability to meet basic needs. Their proposal includes allowing taxpayers with an I-10 to qualify for a property tax refund. Number two, increasing the maximum property tax refund for renters with an average increase of approximately $127 and adjusting the brackets so approximately 10,000 new claimants would become eligible and file for a renter's credit. The renter's credit investment would increase by over $35 million per year beginning in fiscal year 23. It also finally excluding veterans' disability compensation from the calculation of household income that is used to determine the property tax refunds for both renters and homeowners. This would impact about 34,000 taxpayers and increase refunds by about $140 for eligible homeowners and renters receiving veterans benefits. COVID-19 has also impacted every Minnesotan across the state, but not every Minnesotan has been hit by the pandemic equally. Thousands of Minnesotans experienced job loss as a result of the pandemic and relied on unemployment insurance this year. The revised budget prioritizes providing relief for those individuals who relied on unemployment insurance benefits by allocating substantive funds to provide tax relief to these affected taxpayers. Taxpayers who received unemployment insurance benefits in tax year 2020 will be allowed a subtraction of up to $10,200 for unemployment insurance benefits. Over 500,000 households will receive relief with an average reduction in tax of $486 in 2020. This is a one-time investment of over $250 million in fiscal year 22. The governor's revised budget also includes many changes that relate to conformity with federal tax law changes since December 31, 2018. These changes are intended to provide tax relief, certainty, and less complex filing for individuals and small businesses. The conformity item that I just will quickly highlight is the Paycheck Protection Program, which we've all heard so much about. And this is a federal program that allows loans to be forgiven if proceeds are spent in accordance with certain criteria. The revised budget includes modified conformity by allowing an exclusion of the first $350,000 of forgiven loan amounts from Minnesota income. Approximately 90% of the loans received in Minnesota are in amounts less than $350,000, and therefore the entire amount would be able to be excluded from income. Finally, the tax bill includes significant revenue raisers, including an increase to the corporate franchise tax rate. The bill proposes increasing the rate from 9.8% to 10.8% and creating a fifth tier for individual income taxes. The bill establishes that fifth tier income tax rate at 10.85% for incomes over $1 million for married filing jointly, $750,000 for head of households, and $500,000 for singles. Over 21,000 households would have an average increase in tax of a little over $8,000 per return. The number of returns that this would impact is 0.7%, and these are really the more wealthy taxpayers across the state for sure. The revenue from these taxes will fund other needs throughout the state, including education, housing, and health and human service costs. And so with that, I thank you. Just wanted to get through that and stand for whatever questions that you have.
Well, thank you so much. It's a lot, but it does, it's a great introduction to just this idea about how do we use the tax system in a way that actually has levers to advance more equity. One of the things I'll note that the home mortgage interest deduction over time has been reduced, but still it's about $83 million as a tax fiscal note. And that's about what used to be in recent years the entire budget of Minnesota housing,
Right.
to advance affordable housing. And of course that goes up to homeowners even after being adjusted that have homes valued up to $750,000. So I think there's so much room, as you've noted, with these tools to really advance more equity.
And to that point, if I could just mention, I think one of the things that I am, and you talk about my vision and the goals that I have, I just have to say that I took on this role in November of this past year, so I'm still pretty new at this. And but one of the things that I have been so excited about is what is in this budget, and because one of the reasons that I got into public service was I actually wanted to make sure that the work that I was doing was impactful to people and in a positive way. And I honestly believe that the proposals that are in Governor Walz's COVID-19 recovery budget they're tangible and they actually will help individuals, and particularly those low and middle income individuals. And there's a variety of proposals that he has that do that. And I'm just excited about it. And I'm just happy to continue to advocate for it.
That's great. Well, and again, later in our program, as I mentioned, we'll hear a little bit more about Together We Rise campaign, which is really looking to increase revenues in an equitable way as well. So we'll get to that in a moment. I did want to talk about two specific tax proposals that are specific to housing, not expecting you to be the expert on them, but just getting your take and how you approach this. As you know, it's a strange fact that the federal agency that's responsible for the largest affordable housing production program in the country, which is the low-income housing tax credits that was created back in the 1986 federal tax bill, is administered not by HUD, the housing agency, but actually by the IRS. So using the tax code to create affordable housing has been around for a while. And I'll also note that Minnesota needs predictable and sustainable new sources of funding for housing, right? A little fun fact is that transportation has 7 dedicated revenue streams, while housing has none. So the Senate tax chair, Senator Carla Nelson, she's introduced legislation that MHP has helped advance to create a state affordable housing tax credit. And it's modeled after this very successful North Dakota program. It'll stimulate affordable housing production, especially for the lowest income Minnesotans, and target these public dollars where the market just doesn't produce units, really at that lowest income level. So it'll encourage businesses and neighbors to invest in housing. And we estimate that for every $25 million in affordable housing tax credits, we can produce or rehab anywhere between 500 and 1,700 units of housing and generate 700 new jobs. So many states have state tax credits. Minnesota is one of few that does not. And I'm wondering if you have any thoughts on this program specifically, or this type of approach, and how you and your agency might think about such a tool.
Sure, thank you. So first of all, I would say the governor absolutely 100% agrees that we need additional affordable housing. There's no question about that. And that's why in his budget, there's a recommendation for $100 million in home and housing infrastructure bonds. Also a $4 million increase in the Challenge program, as well as $1.5 million increase in the Workforce and Affordable Home Ownership Development Program. And so those things also will begin to address the issues with regard to affordable housing. I think that unlike credits provided to businesses as part of the tax system, the governor's approach with this those investments are very direct. And I think that that's a little different, and then therefore would have been effective ways to increase housing in our state. I think that, with regard, we're still really looking closely at Senator Nelson's bill specifically, and I will say that the credit rate on that's pretty high, and that's something that we're looking at closely. So I think that there are we've got questions about her specific proposal, and we'll continue to look at that. But I am happy to say that the governor definitely has recognized and continues to recognize the need for affordable housing, and does include funding in his budget to do that.
Sure, thank you. Another program I just wanted to sort of raise up and see if you had any thoughts on was the 4D program. It's a very attractive, descriptive name. No, I'm kidding. So, MHP and others are hoping for a legislative fix to really adjust this program that has already, for the last 8 years, helped sustain affordability in housing. And it works like this, right? For taxation purposes, affordable housing in Minnesota is assessed to have the same value as market rate housing, even though it can't generate that same value unless it's taken out of affordability, because the rents are restricted in terms of the revenue it can produce.
Right.
So to correct this 4D program was created to provide that lower property tax rate to help incent the operating, retention, and construction of this low income rental affordable housing. But in the past 7 years, driven by market rate valuations, that tax valuations for affordable housing have increased almost 75% on these low-income properties. But the classification rate that's provided that affordability has not been adjusted. And so part of what the proposal this year is to say, let's adjust it, right? Because it was working, the whole program. We've already litigated that it's a great program, it's a great way to do affordability, but it hasn't been adjusted. And so most affordable housing that it has helped has been reduced or wiped out because of, with the benefit of this program to those. So do you have thoughts on the program, or how you might evaluate your agency's approach to this?
Yeah, so I think with the 4D program, I think I'll say that, conceptually, we don't disagree at all with the concepts of the program. I think that we do have some concerns that we still are looking into. And I think the biggest overall concern that we are looking into is wanting to make sure that there are requirements for making sure that the benefits that are gained through that extremely low rate are then put into, there's some amount of that that's specifically required to be actually put into the livability of the housing itself. And to make sure that the tenants actually can benefit from that. So this is not something that simply landlords are able to simply benefit from. So that's something that we're looking at closely, and hoping that that we can continue working together on how how to strengthen that proposal overall.
Yep. And let me say, we absolutely agree. We want to make sure that that's exactly where the affordability needs to come back to. So,
There you go.
well, we are out of time for this segment. We so much appreciate
Thank you
your
so much.
coming. Again, I know that housing isn't always seen as sort of the core of the tax, but it really impacts the work we're doing. And congratulations on your appointment as well. You're
Thank
still
you so
sort of
much.
new, I guess. But thank
I
you for
appreciate
joining
it.
us. Yeah.
Thanks a lot.
Okay. Elizabeth
Okay.
Glidden will now get us to our next segment. Elizabeth?
Thank you so much, Anne, and thank you again, Commissioner Doty. It really is an honor to have you on our program and expand our horizons outside housing only. So we are now going to turn to two speakers that really have extensive and deep experience with the state legislature and topics that come up at the state legislature. Nan Madden, who's the director of the Minnesota Budget Project, and Brett Grant, who's the director of research and policy for Voices for Racial Justice. And we are going to be talking about the Together We Rise campaign, which is a campaign that Minnesota Housing Partnership has endorsed and supports. But in general, revenue is often one of these topics that garners the most debate and controversy at the state legislature in terms of whether to raise it and who benefits from whatever mechanisms are chosen. And with that, I'm going to turn things over to Nan Madden to start us off with an overview of the Together We Rise campaign and some of the revenue options in the legislative session. And then we'll turn next to Brett to hear some perspectives from him on how to have intention within those revenue raising goals. Nan, are you there?
I am. Thank you. And really appreciate the opportunity to talk with you all about the Together We Rise Minnesota campaign, which is co-convened by the Minnesota Budget Project and the Minnesota Council of Nonprofits. For folks who might not be familiar with us at the Minnesota Budget Project, we are a research and advocacy initiative of the Minnesota Council of Nonprofits. We identify and advance policy solutions to make Minnesota a place where everyone can thrive, regardless of who they are or where they live. And we work primarily in the areas of tax, budget, and economic policy. So the Together We Rise campaign is informed by some key realities facing our state. First off, that the pandemic and the related economic downturn requires a bold response at all levels of government so that all Minnesotans can be healthy, safe, and economically secure. Secondly, that this economic recession is the most unequal in modern history, and it's hitting hardest those with the least resources to get through it, including lower income people and people of color. It's also informed by the fact that the pandemic, as well as the police killing of George Floyd and Minnesotans' responses to that event, has really lifted up the ways that our policy choices and structures create great disparities in well-being and opportunity. And those things have added momentum to work that some folks in our community have been doing for a really long time, but I think have also added momentum for policymakers to make real progress on advancing racial justice. And then lastly, that the drops in state revenue as a result of the pandemic are a threat to public services that Minnesotans count on. We believe that Minnesota can take the bold action needed to respond to those realities if we draw on the resources available to do so. And among the resources we need to turn to is raising state revenues. The Together We Rise Minnesota campaign is a way for folks to join together to make the kind of case for the kind of response that's needed now and to bring about a stronger future for our state. We know from more than 20 years working on tax policy that state revenue raising is possible when people come together to make a compelling case for what's needed, speaking from their own expertise in their communities and the issues they work on, and that we demonstrate that the alternatives to raising revenue are unacceptable, whether those alternatives are failing to respond to the pandemic and the recession or falling back into a status quo that allows deep racial and income disparities and lack of investment to continue. So we are in this campaign united by two principles. Maybe if we can go back a slide, we've got the principles there. Minnesota is a state of abundance and should raise revenues in order to fully respond to the pandemic and economic downturn. So Minnesotans can be healthy, safe, and economically secure. to protect community and public services that Minnesotans count on, and to build a more equitable recovery. And secondly, that policymakers should prioritize revenue raising options that focus on those with the most resources and that make the tax system more fair and equitable. About 100 organizations have signed on to those principles so far, and it's a variety of nonprofits, organized labor, there's some businesses in there, and really a range of sizes and issue areas. Some of the key activities and resources of the campaign, and if we can go to the next slide here, it creates an opportunity to engage in the revenue debate. Some of our campaign members participate in working groups and are involved in a kind of more day-to-day way with the work. But then there's other engagement opportunities as well, like sign-on letters or earned in social media activities. We provide information and resources. And one of the things we've been happy to contribute to that campaign is that the Minnesota Budget Project invested in a statewide survey that demonstrated that there's a strong majority of Minnesotans that support raising revenues on those with the most resources. We also have messaging and communications tools, social media graphics, analysis, educational materials, and we've just launched a story bank to collect the stories of what kind of investments are needed in our state. So I'd encourage you to visit our website as a central place to find information about the campaign. So we continue to adapt and move the campaign forward, informed by the state's economic and budget landscape. It is still the case that the pandemic and economic harm are ongoing. There are still high levels of hardship. There's way too many folks still out of work, struggling to put food on the table or have fallen behind on rent. You may have heard that in February, the state got a new budget forecast where things were looking better, but primarily in the short term. So the state's revenues are doing better, but general revenues are still down compared to what was expected about a year ago before the pandemic hit. The state is expecting a modest surplus in the 22-23 biennium, but most of those additional dollars are temporary. And in the 24-25 biennium, if we look a little further out, the state is projecting a surplus, but if we take into account just what it costs to keep existing services up for inflation, that turns into a deficit. So improving situation, but still a tough one in terms of revenues. In addition, there's recent federal legislation is sending some significant funding to the state and local governments to respond to the pandemic and recession. That's really good news, but once again, it is temporary. So really our argument is we need to use those short-term dollars wisely to respond to the pandemic and to make structural changes to address the areas of disinvestment and disparities that existed before the pandemic. So we need to use those short-term dollars wisely now, but we need new state revenues to sustain those investments and those structural changes after the one-time influx of federal dollars has gone. We are seeing our campaign principles and policy goals reflected in some of the budget and tax plans put on the table. And this slide just gives you a really high-level recap of what the proposals are at this stage in the legislative session. These numbers are the state numbers, so the federal dollars are not yet factored in. But as you heard from Commissioner Doty, the governor does raise some new revenues focused on those with the most resources, which then are used to help fund $1.6 billion in new investments and also funds additional economic supports for workers, families, and renters. The House also has proposed progressive revenue increases. It's a little more confusing the way it's structured, but the way to think about it is the House tax bill does raise a significant amount of revenues from the highest income Minnesotans and corporations with overseas profits, but then they spend those revenues in the 22-23 biennium on tax reductions and additional supports for people in local government within their jurisdiction. So the combined effect of raising those dollars, but then spending them on aids to local governments, some tax cutting as well, nets out to a zero in 22-23. But after those temporary tax cuts are over, their plan actually raises $450 million in new revenue in the next biennium in 24-25. The Senate goes in a different direction. They do not raise revenues. They actually propose a $591 million cut in taxes in 22-23. I think a fair amount of that will be temporary. We haven't seen their omnibus bill yet. And as a result, you can see that then their budget has the smallest amount of new investment because they're not bringing in additional revenues to meet the needs of the state. So that's a little bit about our campaign, the landscape we're working in, the budget landscape we're in, and I look forward to the rest of the conversation.
Thank you so much, Nan. Really appreciate it. And I'll just say if folks have questions, you might put those in the chat as well. I know some resources have been going in there. I want to make sure we have a good amount of time to spend some time with Brett and hearing about the work that you're leading that relates to this campaign and generally around the budget from the perspective of Voices for Racial Justice. So Brett, you know, and I will say also for the audience that Voices for Racial Justice has again, a long history of evaluating actions at the state legislature as well as the actions of individual lawmakers. So I wonder if you could tell us a little bit about why this is a campaign that Voices for Racial Justice is participating in, and I know that you also have really put a focus on having intention around how to think about raising revenue. And so I wonder if you could talk about kind of both of those aspects.
Absolutely. Thank you, Elizabeth. I'll put a link in the chat to a tool that I kind of want to just spend a little time on. So at Voices for Racial Justice, we envision a world without racism that honors the culture, knowledge, power, healing, wisdom of Black, Indigenous, and communities of color. So when we're thinking about a framework for revenue raising, it's within this context of racial equity. And so one of the tools that we use to help us articulate this context of racial equity and revenue raising is the Racial Equity Impact Assessment. And it's a tool designed to help communities and legislators work collaboratively so that racial equity is kept at the forefront of all budgetary and legislative decision-making. It's made up of 5 questions, but I want to focus and spend some time on the first question. I think that's, to me, the crux, the core of the Racial Equity Impact Assessment. Who is most impacted, and how do you engage those specific communities in the analysis? And this session, we've been spending a lot of time working on this question in collaboration with many partners, including the Minnesota Budget Project. At the start of the legislative session, Voices and the Minnesota Budget Project hosted a workshop at the Minnesota Council of Nonprofits on racial equity in the state budget. And in addition to that, Voices, the Minnesota Budget Project, and other partners have been hosting bi-weekly community gatherings via Zoom called State Budget and Racial Equity Bites. And this gives us a chance to be in community where we can explore in an informal environment questions of how the state budget can articulate a racial justice framework. And a guiding question for us that came out of one of those conversations is, where in the governor's budget can we locate the state's racial equity priorities explicitly? And when this question was asked, one of the veteran advocates on the call said to all of us, there is no place to locate that information in the governor's budget. So that her observation in that statement led to some deeper questions, at least for me, about what it means for the state budget to articulate racial equity and how can revenue raising support that. And so I think about the 2020 bonding bill and how it created an equity article, which provided $30 million from the state's general fund for equity projects. Now, the $30 million is not ideal, but it's a start, and it shows an effort to at least articulate in an explicit way equity and bonding. And so the question for me and others is, can something similar happen with the state budget? Where can these be racial equity priorities of the state? Where in the state budget can the racial equity priorities of the state be articulated? And then another tool, in addition to using this racial equity impact assessment, of what I call a tool of articulation, is the Minnesota paradox. You know, the paradox is that Minnesota is a great state for white Minnesotans in terms of education, healthcare, home ownership, and other indicators, but not a great state for BIPOC communities when looking at these same indicators. So in articulating a racial equity framework, can the state budget use the indicators of the Minnesota paradox to show how the budget plans to reduce disparities in indicators such as financial assets and income, businesses and jobs, home ownership and housing, healthcare and education? And the key word here is explicitly, so that our budget would show how we go from the Minnesota paradox to the Minnesota solution. I think I heard that phrase from Dr. Bruce Corey. And so the Together We Rise campaign, a lot of this involves a lot of technical language of learning what revenue raising is. That was the first question I had when we started, is what is revenue raising? You know, and so, and how can that support racial equity? And so that's our interest in being a part of this campaign.
Thank you so much. That was a great, I think, both tool for folks to make sure they're familiar with, but also review of looking at this whole process. We only have a few minutes left, and so I'm wondering if there's a way that we kind of do just a little mini dive from talking about what would be a better, kind of more the process and the bigger picture of how we might think about this, to, are there any reactions that we should understand from both of you, and maybe starting with Brett, about how current tools, including those tools that are now prioritized within the governor's budget or seen as these omnibus bills are coming forward, how well do they do, in fact, in intentionally centralizing racial justice as an outcome? And so, Brett, I don't know if there are any that you would identify for us, either that you think do a good job of doing that or do a bad job of doing that. Maybe I'll even just start with the renter's credit. So this is an item that regularly is discussed. Sometimes it is largely ignored. Sometimes it sees a little boost. What are your thoughts on the renter's credit in terms of its outcome and benefit?
You know, I started working on the renter's credit with the budget project a couple of years ago, and it's been something that I've supported because I know here in Minnesota that, you know, a lot of BIPOC communities are renters and are not homeowners. And I would say that's a tool, but you know, that I can't say that that's a tool that I can champion in terms of, yes, this is the answer. It's one of the tools, but what we're focused on is institutionalizing racial equity at the legislature. And so I would be more interested in what we're working on now is getting this racial equity impact assessment utilized in legislation at the legislature. And we actually have a bill now that hopefully some provisions of it, I think, made it into the House omnibus bill. But there's still, it's to create a working group, to create a methodology that would allow a framework to be articulated at the legislature to use the racial equity impact assessment. And here's the key thing, within the time frame. The difficulty is that first question, who is most impacted, takes a lot of time to develop relationships. And this is going to be, you know, useful for the renter's credit or any other measure that aims to address racial equity. You have to build relationships with communities, and that takes time. And the legislative timeline is a challenge to that because things move so quickly. So that's the goal. That's the difficulty that we have, is that we have a working group that is made it into the omnibus bill, but the challenge is that there's no funding for the working group, which is also another racial equity issue.
Thank you. We just have like maybe 1 minute left. And so I'm going to ask Nan if you would like maybe the last word. And I wonder either if you had a thought on a particular revenue raising tool, or the other thing I think would be interesting is, how has partnering with Voices for Racial Justice in this kind of deeper way around this campaign helped impact the way you're looking at your work? Maybe that is the better closer.
Sure, yeah. Yeah, I'm happy to talk about that. I think something that we, when I compare this campaign to revenue raising work we did in the past, it's been really important all the way through that we really explicitly name racial equity as a goal and name the ways that policies that contribute to racial disparities are part of what's contributing to the disparate impact of the pandemic and recession on communities of color. So it's really made sure that we are very mindful and intentional and continue to be intentional about not falling into a situation where it sounds like we're saying, new money, but raised the same way and spent the same way is going to get us a different outcome in terms of equity, that it's really important that new dollars are spent on structural changes that are really intentional about addressing disparities. And it's, part of a key theme of our campaign is we can't go back to normal or a status quo that really leaves racial disparities in place, that those things have to be really connected together.
So thank you so much, Nan and Brett. I will say I have about 1 million questions in my mind and just would encourage folks to watch the program that Brett mentioned. We'll kind of reference that and look for more resources on the campaign. And we'll make sure that we put that in our follow-up message to everyone, that you continue to follow the work of both of these great organizations and leaders in there. So with that, yes, I want to make sure that we have sufficient time to turn to our final guest, which we are really honored to welcome Representative Esther Agbaje. She is a first-term lawmaker from Minneapolis. And this is actually a perfect segue, I believe, from this conversation because she is one of multiple lawmakers who are serving both on housing-related committees as well as taxes, and being explicit in many of their comments about the intersection between the two, and also the need to review how does our tax system work and who does it serve and what do we need to do to adjust that. And just to call up a couple other of her colleagues that we've had on this program before, Representative Aisha Gomez and Representative Kaoli Her have both been also kind of in that place. But Representative Agbaje, are you here with us? I think I saw you on the line.
Yes.
All right, excellent. Well, welcome. And, I will say as a new lawmaker, you have been especially active around housing in bills that you have authored, amendments that you have made to ensure that objectives and priorities are accomplished through some of this legislation making its way through the system, and raising public awareness as well through events and that you have hosted and been part of around housing. So I want to know if we could just kind of allow you to do a little bit of an introduction of yourself and some of your work, and talk a little bit about your priorities in this first term and first year of your term.
Well, thank you so much, Elizabeth, for the invitation. I'm really glad to join all of you this morning. Yes, as stated, my name is Esther Agbaje. I represent House District 59B, which is an area that covers all of downtown Minneapolis and then parts of the north side, including the neighborhoods of Near North, Willard Hay, Harrison, and parts of Bryn Mawr. So it's a pretty wide-ranging district when it comes to economic factors, demographic factors, and also the variety of housing that's also within this district too. So that, so for me, part of why I got so interested in housing is my background. I'm a trained attorney, and as a law student, we had a clinic at my law school that basically allowed us to be student attorneys working underneath licensed attorneys. And I worked primarily in housing, and which was basically eviction defense. So just kind of seeing how that system worked as a student, where if you didn't have enough money, we were basically telling people they had to be out on the street, Sometimes a lot of the subsidies or support programs that were meant to help people with their rent or with other money to supplement their income, would change as soon as someone, crossed an income threshold rather than phasing out. And then also when I started practicing in Minnesota, I also continued that work with volunteering with the Volunteer Lawyers Network in their Hennepin County Housing Court program. So, so I've always kind of kept a proximity to housing issues because I believe, like many of you do, that it is a fundamental right. It is the base of what allows people to succeed, allows people to thrive. It ensures that children have a safe place where they can go home, eat, do their homework, do well in school. It's good for parents because then they can also have that stability in keeping their job and hopefully increasing their income and eventually increasing their wealth. And then also wanting to do more in the areas of pathways to home ownership, particularly for our Black and Brown community members, because we know that they have actually been explicitly discriminated against in that space. And we know that that is one of the ways that in this country leads to wealth accumulation, which is what we want to continue to provide through our housing policy, what we fund in housing, as well as our tax structure too. So hopefully that helps to tell you a little bit more about me and my interests.
Thank you. I want to just maybe have a general question also about, you have a great position serving both on the Housing Finance and Policy Committee as well as the House Taxes Committee, and I believe also on capital investment. So you're really kind of in those places where the money decisions are being made. And I know that I was reading a kind of a little bit older article about you from Sahan Journal, where you were talking about ensuring that the public puts money and resources to value the people that we really haven't in the past. And so I was wondering, how do you see those values playing out through your work in the Taxes Committee in particular? And are there any items that you'd particularly like to highlight, since the Tax Committee just has its omnibus bill ready to go here?
Yeah. So in the Taxes Committee, for me, that was always something of interest to see, like, well, where, how are we actually backing up our rhetoric with money? Since we know money is kind of a lot of the places where if you want to see what someone's values are, you look at their budget. And so, as a first termer, I had a huge learning curve, but at the same time, also knew that I wanted to see and work with other like-minded legislators that were interested in ensuring that we either had the revenue raised and making sure that that revenue was going into programs that would support people who we don't traditionally support, or that if we were doing credits or incentives, that they were incentives to ensure that we had more things like affordable housing. We were, recognizing, the amount of money that renters put into their rent, and that we also had money that we also were investing in programs that would begin to decrease homelessness. So actually, in the budget, some of the pieces that I'm really glad that got through was creating a fund to support the reduction of homelessness, to ensure that counties had that amount to help them in their anti-homelessness prevention and prevention programs for homelessness. So that's one thing that's in the tax budget that I think is really nice from a credit perspective. There's also additional expansions of working families credits, which I think will really help a lot with lower income, low wage people who we don't traditionally provide additional credits for them. We're usually providing credits for people who are closer to the top. So I think by expanding the working families credit, we're really working on making sure that more money stays in the pockets of working people. And then finally, we are, I think earlier in the program, they were talking about some of the 4D programming, and I know that there is at least a provision in the tax bill to at least conduct that study, and I think there's some pieces of trying to get at parts of that 4D program that we can do right now. So we do have some pieces in there that are really focused on, supporting, people who own their homes, renters, and working families, to make sure that they have more money in their pockets, and that we're showing that we want to put an emphasis on those spaces, whereas before we kind of just let that, go by. Well, we'll maybe do some direct cash investments, but we're not necessarily doing anything to inform the structure of how we do our taxes in Minnesota.
So one of the bills that you have authored is expanding the eligible uses of housing infrastructure bonds to include naturally occurring affordable housing. So I was wondering if you could talk about that a little bit, and what do you think the path is for that as an example? This is an area where we've been learning about naturally occurring affordable housing and how it doesn't quite fit within the existing programs of Minnesota Housing, at least with any specific mechanism for helping to preserve or protect it.
Right. As I learned about NOAA as well, I realized that, yeah, that's a essential piece of our housing stock, because we have housing that's already there and ready. Maybe it does need to be rehabilitated so that way it's more habitable for people and families, but we don't have anything that specifically is like tailored to preserving that type of housing. And I think we need it. So part of the reason that I was happy to author that bill was so that way, as we're thinking in the spectrum of housing, we're not forgetting that. And so right now, I think, that's definitely a use that we want to see our housing infrastructure bonds go toward. So we're not always just looking at building new housing, because we can't really build our way out of this problem, particularly, especially if we don't yet have the pieces in place to incentivize builders to build at more affordable rates. And so one of the ways that we can do this is by making sure that, nonprofit groups, community groups that can come together and raise that capital, or can come to the State House to ask for that capital, can then use it to, acquire a building, renovate that building, and put it back on the marketplace at rates that are affordable for more people.
Another thing that you mentioned, you talked about your experience with legal services and support for renters, and you have carried that through with several bills that are supporting ensuring that renters have appropriate rights. And I'm curious what you think might be the opportunities for either some of your bills or others. There's kind of a growing number of these items that are kind of on the docket, so to speak, to be able to find some points of agreement between the House and the Senate and become enacted into law.
Yeah, I really hope that we can. I think a lot of the pushback that we heard on the laws that would support tenants' rights in committee was just like the effect it would have on landlords. Maybe it might make things expensive for landlords, or harder for landlords to get rid of, troublesome tenants. But, one of the things that I actually do want to say to people is these laws are really, if you think of it in like the contracting space, these laws are really meant to say, this is what happens when we get to a full breakdown of the situation. But we're always encouraging tenants and landlords to talk with each other, communicate with each other, because you may not even necessarily ever need to use the court system whatsoever. We know now that one of the major issues of why people aren't paying their rent is because they don't have a job. And I think any reasonable landlord would understand that and would want to help to make sure that a tenant has access to the amount of funding that's coming in to support renters, which also supports landlords, because that money going to renters goes directly into the landlord's pocket. So I think in terms of that, aspect, one of the bills I have really is talking about, clarifying a lot more of our eviction laws, so that way both the landlords and tenants know what their roles are when we get to a point of an eviction. And it's not to try to keep tenants in unnecessarily, and it's not to try to hurt landlords, but it really is to make sure that we have a legal system that's fair from the beginning for both sides, that both sides understand their rights and their roles in the process, and that both sides also have that time and that opportunity to probably mediate whatever the situation is, or if it does end up in the tenant needing to move, allowing the tenant to have that time to move. So it's really trying to make the whole system clearer and not try, because the way we have our system set up now, I think a lot of tenants feel very surprised in the eviction process, and we don't want that to happen.
So maybe kind of heading towards maybe our last question or two. So in the House as well as in the Senate, clearly there is increased attention on housing, even if those priorities may be different right now. So in the House, kind of what we hear is that many of the newer or freshman lawmakers have been increasing the pressure on leadership to prioritize housing and really helping be leaders on ensuring that housing is more of a top tier issue instead of what it historically I think has been as maybe a second or third tier issue even. What are you seeing are ways that you can advise those of us on this call that we should continue to engage in the session to ensure that we're able to see some housing wins, so to speak, at the end of the day?
Yeah, I mean, you know, as a first termer, like as I said before, a lot of this is new. So every week is like, okay, we're in a new landscape now. But the one thing that I can continue to say is, you know, putting on that, you know, as you said, pressure and really making sure that people understand who we're fighting for and who we represent is to really ensure that the state of Minnesota is working for everyone in Minnesota. And we know that specific groups have been left out. And so I think part of the reason why me and some other first termers are really putting an emphasis on things like housing, on things like fully funding education, on things like funding our healthcare is because those are the pieces that ensure that anyone can live a good life in Minnesota. And we want to make sure that those resources are also being targeted to people that we've left behind. So the more I think that, you know, people can engage with us as their legislators, both representatives and senators, and also engage with, you know, people that they might know in the administration to really continue to say that, look, this is what Minnesotans want. It's not just some random, you know, hot take that was out in social media, but it really is something that, you know, people in Minnesota need. They deserve it, and it's what our government should be doing in order to make sure that we're working for the people and supporting people.
Well, thank you so much. It was so great to have you on the program, learn more about you and your priorities, and we'll continue to engage with you as we head towards the end of the session.
Yes,
and
thank you guys so much. I really appreciate it.
Absolutely. With that, I'm going to turn it over to Nan Madden to close us out.
Thank you so much, Elizabeth, and Representative Agbaje. Thank you so much. You must be one of the hardest working, most productive freshman legislators out there, and we really appreciate your hard work on behalf of affordable housing. I just want to thank all of our speakers today. This was just a phenomenal conversation and just really insightful, high quality thinking. I think the last question that Elizabeth and the representative were discussing is on point, which is that as the session draws to an end and leadership will increasingly have influence over these negotiations on legislation, we need to make sure to continue to keep housing on that top tier, and we need your help in doing so. So as MHP learns of these opportunities, we'll be reaching out to you and asking you to talk to leadership, contact, reach out, do it on your own. We'll also send out some information to you. And thank you so much for all of your work out there in advancing affordable housing. We'll see you soon. Thank you so much.